Welcome to Trends with Benefits, an award-winning podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, work, and life. Here's your host, Ed Lopez.
Welcome to this episode of Trends with Benefits. My guest today is Eric Flynn, Head of Wealth Management at Compound Planning, and really looking forward to talk to him because my colleagues who went to Future Proof this year came back and said he was dubbed the most interesting man in the RIA space. So I had to take this opportunity to talk to him. Eric, welcome to the show.
Thanks, Ed. Happy to be here. With that introduction, I can do nothing but disappoint from here on out. So thanks for that. I think we're done here, folks. Thanks. I think we're done. I think we can walk away. But no, happy to be here. Excited for the opportunity. So thanks for having me.
Absolutely. It's kind of like a comedian. Once you learn they're a comedian, it's like, make me laugh, man.
Yeah, exactly. Yeah.
Actually, that is one conference I haven't been to that I've been wanting to go to the last couple of years. Just something has always come up. What did you think of the Future Proof conference? Was that a good one for you in your space?
Yeah, Future Proof is fun. I mean, it's kind of more of a festival. You know, everybody's in shorts and polos and hats walking on the beach. So it's a different feel for a finance conference, but lots of good content, lots of good networking. I had a great time. So met a lot of good folks. Obviously spent some time with the Van Eck people out there and enjoyed the conversation. So yeah, I think we had some good conversations. It was good from a business perspective, also from a personal development and professional development. Good sessions, good content, lots of good things from the RIA space. So yeah, it was a good conference overall.
Yeah, I've heard good things. Mainly RIAs, right? Let's mainly focus on that channel.
Yeah, it's really more kind of the independent RIA channel. There was a few that were kind of more on the independent BD side, but I would say it's mostly focused towards the independent RIA space.
And then so Compound Planning, you guys are based where?
New York City is our headquarters.
Oh, okay. But you're in Montana, I think.
I am based in Bozeman, Montana. Yes.
That's awesome. How did that work out?
Yeah. So I'm in a fifth generation Montana, and I've been here a long time. Yeah, as some of my work through the consulting space, I ended up finding the Compound folks, and had some good conversations, and ended up coming on board here a few months ago.
Oh, fantastic! So fairly new, but you're not new to the space, not to the RIA space.
No, I've been in the RIA space for close to coming up on 25 years now.
Cool. Typically, I wait to talk about the company towards the end, but since we're already here, maybe tell me a little bit more about Compound and what your role specifically is with them as the head of wealth management.
Sure. So Compound Planning's think of it as a tech-enabled RIA, but I think of us more as a tech firm that does RIA versus an RIA that actually is trying to assemble tech. So it's a very different mentality in the grand scheme of things. So my role is head of wealth management. So the advisory team reports to me, investments, ops, our tax team. So really my job is to try to make sure we're putting an integrated product together and making sure that everybody plays nice in the sandbox, so to speak. So really kind of making sure we have an integrated solution platform for our advisors and making sure we're providing a really good client experience as we go forward, as we're kind of building out. We are kind of a tech startup, so we're in the process of building a lot of things along the way. So, but really trying to make sure that we're putting good content together, good product out to our clients, and making sure that they have a great client experience, as well as I view it as, you know, our advisors are a client as well. So I want to make sure our advisors have a great client experience, as well as our end clients as well.
Your advisors are nationwide, I guess, in different locations.
Correct. Yeah, we're scattered across the entire country. So we're split for everywhere from basically Northwest to Florida to Southern California to New York City and everything in between. So I've been trying to get out and see most of the advisors in person, so that keeps me on the road a lot. But it's been fun so far.
I know last time we talked, you said you were on the road, 13 weeks a year or something like that, or more?
So I think I've been with the company for 14 or 15 weeks, and I've had 13 plus weeks of travel. So it's on almost every week ordeal at this point. So yeah, actually caught me at home this week, which is great.
Yeah, fantastic. You know, what's interesting about that, I imagine you're meeting with RIAs, advisors of all stripes. I wonder if you could talk a little bit about what you've seen and maybe just drawing on your own experience in the space for the last 25 years. I mean, what are some of the biggest trends you see affecting the space today?
Lots of things going on in the industry right now. As you know, there's a big M&A consolidation trend, and I think a lot of that comes from I won't call it fee compression, but more of a margin compression. Is clients are demanding more from their financial advisors and their advisory firms with other services, whether that's tax or estate planning. If you're a smaller firm, it's really hard to provide a lot of those extra services. You know, it's tough to build out a tax team. It's tough to build out an entire estate planning team. So I think that's what you're seeing is a lot of these firms are rolling up into the bigger consolidators because they see that it's tough to compete. Clients want more. So either you have to kind of reduce your fees, or to justify your fee, you have to offer more services. And that becomes very difficult if you're, to get size and scale to be competitive in some of those things, you have to be a little bit bigger. So I think that's driving some of the M&A consolidation. Plus, it's just the demographics in the industry. Lots of aging advisors in this space that are looking for a succession plan, and the result of that is either looking for outside capital to help kind of transition to a next generation advisor, or you end up kind of selling out to one of the larger firms and rolling into one of the consolidators or a strategic that has good synergies to kind of partner with and join with going down the road.
Yeah. I can imagine trying to scale is a big one. I mean, do you think the change from more commission-oriented structures to more kind of fee based on assets, or even flat fee? I don't know if you're seeing much in the way of like flat fees for advisory services. Is that's kind of what really driving this need to scale as clients look for greater services?
Yeah, it's the industry's changed a lot. And if you roll it back, I mean, most times you hired a broker for access to the market, and that kind of got solved with technology and more access and more availability. And then it was more to the asset allocators. It was like, okay, I can give you access to different asset classes and put it together in interesting ways to build portfolios. And then now we've kind of moved past that, where it's more financial planning based, and that's becoming table stakes now too, where you kind of have to be able to provide that and integrate more other things to clients, to outside of just the investments, to be competitive in the market and keep clients in the door because others are doing it. So I think that's the industry, as the industry changes and evolves. I think that's where you're seeing the different competitive forces, and you're seeing some of that. I have to stay competitive in the market to keep my clients, and that's driving some of the differentiation in services, plus the ability or the desire to consolidate with some of the bigger players to make sure you can still stay competitive and offer those services to your clients.
Yeah. So I started out my career a very short period of time trying to, smile and dial and raise and get clients in the advisory space. But, I think we had like what I'd call holistic financial planning practice, where you'd have investments, you'd have insurance offerings. Does holistic mean something even broader these days?
Yes and no. I think it's always been the same. It's just how you implemented it. I think, if you roll it back, I think it was more, how do you partner with somebody else to create that relationship, to provide a holistic plan? But it was all kind of outside your firm and outside your control. And I think you're seeing a lot of that holistic planning now being, how do we offer that in-house? And, and it kind of as a one-stop shop. So it's almost, the trend was everybody needs to be independent and only kind of focus on this one thing. And now you're kind of seeing the reverse of that, where clients are really wanting everything to be in one-stop shopping, so to speak. So I think it was kind of the disintegration, and now it's kind of back to the more integrated solution, where holistic, but we want holistic almost within the same four walls, or very closely integrated, rather than, hey, I have this estate planning attorney over here, or I have the CPA that's over here, and I can make the introduction, but that's kind of the end of it. And now the expectation is that it's more of a seamless solution, almost holistic in-house, seamless transition, seamless client experience.
How does technology come into play then, and in that regard, in helping to bring all these pieces together?
Yeah, I think technology helps a lot when it comes to that. I think it was much more difficult to integrate all those pieces. And now with a lot of the technology platforms on the tax side, on the estate planning side, whether, some of the tools like Vanilla or some of these others, there's lots of ways that you can integrate more of the services in-house and almost feel like a white labeled solution, versus having to go completely outside and provide that service in a different manner. So technology's come a long ways. I think it's getting a lot better on how we can help clients achieve their goals. And I think it's twofold. One is we're able to get better data on clients, so you can actually use that to help them achieve their goals in a better way, and kind of implement that with technology solutions. And second is technology and AI solving a lot of the problems that if it's more of the plain vanilla, more simple, more predictive things, technology can solve a lot of that and make it really easy for folks to get access to some of those services, versus where before everything was customized, everything had to be through a third party, and it was very much more difficult to get those services and get that expertise.
Are you guys doing something in AI and bringing that to bear?
Yes, I think everybody's using AI in some way, shape, or form. So we're doing it in not in a broad spectrum where AI is ever going to replace an advisor, but we're trying to use AI to make advisors' lives easier. So whether that's transcribing meeting notes and kind of coming out with bullet points and action items, or point solutions here or point solutions there, that's where we're starting. But I think where we're going to see AI have a more significant impact going forward. Again, it's not going to replace advisors. It's not going to, be the thing that's going to be servicing clients in that way, shape, or form. But I think it can really help grow and scale advisors and provide much more time for them to do the things that are important, which is more on the judgment side and not on the predictive side. So that's spending more time with their clients, really figuring out what they want to do and help them achieve their goals, rather than, transcribing notes and, coming up with action items after a meeting and then making sure that those go onto a to-do list and things like that. So I think AI will solve a lot of those problems and make people more efficient, which in turn I think is going to help the client experience in the long run and help advisors do a better job of providing that what we call the magical client experience.
When you're talking to advisors, I assume your part of your role is to sign folks up and be part of the system, if you will. But are you knocking on doors, introducing people to compound planning, or are they finding you and saying, hey, I know I want to scale, I need some help?
Yeah, I would say it's a little bit of both. I mean, some of it is kind of reaching out, but a lot of it is advisors reaching out to us now that we've got a little bit more of a brand recognition in the market and obviously out on the conference tour and trying to build the compound name and the compound brand. So we've had a lot more folks kind of on the inbound train saying, hey, I love what what I hear about you guys. Would love to see your technology and how we can use it and scale it for my clients. And so that's kind of the inbound, as well as, we have some folks that we target as well and say, I think they'd be a really good fit for us based on, who we've worked with in past lives and whatnot. So I think there's a little bit of that, but for the most part, it's really on the inbound.
Yeah, that's great. What are the questions that an advisor should be asking of folks like yourself or other parties, or even just considering just continuing to go it alone?
Yeah, I think it really comes down to that decision of whether you want to stay independent or whether you want to join someone. Is what are you really trying to achieve, and what are you trying to offer to your client? Somebody like Compound has, we're very tech focused, so we have an integrated dashboard that provides the client experience, and we're really focusing on building our own tech and our own integrated system. So I think the two sides of the industry you see is RIAs that are trying to integrate different pieces of tech to try to make it feel seamless, whereas we're on the other end of the spectrum where we're trying to build our own tech so that we don't ever have to kind of cobble things together and make sure that everything plays nice and you can access everything you need to do your job. So that's kind of the two ends of the spectrum of how kind of RIAs are approaching the market. But it really comes down to personal preference of, do you want to join a team and kind of have that team mentality, and then what types of tools and what types of offerings do you want to have to offer to your clients as you kind of go forward and grow and scale your practice? Or, some people just want to have a lifestyle practice, and I don't want to have to deal with, being part of a team or being part of a firm and, all of that. I just want to do my own thing. Yeah, and that's totally fine too. So I think that's where the decision point really comes is, if you get to the point where you're growing and scaling and you want to free up your time and you need more tools and more resources, that's usually when people start to reach out and figure out if we can help them get to that point. Because as they get bigger, all of a sudden you have, it becomes a business and not just you're not just being an advisor. You're worried about things like compliance, and you're worried about, your back office and your CRM and, making sure you're checking all the boxes. And then all of a sudden your time is distracted from actually being an advisor and helping clients. Is why most people get into this industry. So as soon as that happens, I think is where it comes to the point of where you either have to start to hire people to help you kind of build your business and kind of take some of that off your plate, but then then you're managing people and not, spending time with your clients. And that really becomes the decision point of, is it time to roll in and join somebody that can help support me so I can spend time doing the things that I want? Or do I actually want to build my own enterprise? And then what does that look like? And how do I add folks that can help me do that and help me grow and scale? And
are you finding that, I don't know, what kind of the demographics of your clients, or are the advisors joining Compound, say maybe relative to the broad RIA space?
I would say our client demographic and our advisor demographics is probably a little younger than the industry average. We've got a lot of advisors in their 30s and, they're kind of the second generation advisors. So they're really looking for that next tech platform that you can really help, that they can grow with the firm and grow with the technology with their clients. And I think that's been a good attractor for us. And I think our core client has really been a good kind of a tech executive going through a pre-liquidity structure, has a lot of equity comp, complicated portfolio. Those are I'd say the kind of the bread and butter clients that we've really had over the last couple of years as well. So I think that's it's an interesting demographic is what I'm getting at. I think we have a little bit younger client base, and I think we have a little bit younger advisor base as well. So it's an exciting time.
I get the tech angle, perhaps, of connecting data points, if you will, to some extent, but are there specific tools, interesting tools that you guys bring to bear to help advisors do, I don't know, service their clients in better ways? I don't know what you just talked about, like the tech executive. I mean, is there a tool on the platform where somebody just put in a portfolio and help them find a different route for investing or a way of getting less exposure to the company that they're at? I'm kind of just making stuff up off the top of my head, but you know where I'm getting, right?
Yeah, no, I get where you're going. So I'm going to pitch our compound planning dashboard. So we've built a client dashboard that anybody can come and link up their assets. We have an equity comp tool that we built there that really helps people kind of understand what could their equity options be worth, what could their equity comp be worth, how should you be looking at it, and that's all built within our system. So I think that's been a very big differentiator for us, is really focusing on some of those types of clients. I mean, not saying we don't have any of the others, because we do. We have kind of the broad spectrum, but I would say our equity comp tool has been very highly regarded, and people really enjoy using that because it kind of shows them kind of what it could be worth through different seed rounds and different funding sources. Where are you in the process with your company? What seed stage are they at? And how could your equity comp be change given where you are within your company? And then we have a bunch of advisors that are very focused in that area too. So they're experts in equity comp and can really help guide clients through that process, because it can be tricky. It can be complicated. It means a lot to our clients, and it's a big chunk of their net worth potentially. So you want to make sure you get that strategy right. So we've really built a technology solution around that as well. So and back to our internal tech, I mean, the differentiator for us is we're building all of our own tech. So we have our own dashboard, our own client interface. We have our own financial planning tool. The reason that we do that is we want to make sure that we can integrate all of our data and have access to all of the data, so that as we go forward, we can use things like AI to make sure that we're gathering the data, we're using it, we're putting it in front of our advisors to make sure that they can be proactive with their clients and servicing their clients. And again, back to client experience, we want to make sure our advisors have all that information at their fingertips. If the client does something that was unexpected, we want to make sure that the advisor is alerted to that, so that they can have a good reach out point. And make sure we're staying in front of that so clients can achieve their goals and have a great client experience here at Compound.
Yeah, that's great. Yeah, I just started using, I won't say just, but been using ChatGPT, for instance, for various little tasks. It's fascinating. And, at times I wish that we had more systems connected to it so we could just easily ask it whatever, like what client, XYZ, are they invested in? I mean, I don't know if you're coming up with something like that where it makes it that easy for an advisor just to get back up to speed on a particular client's situation.
Yep, we're working on a lot of that as we speak, actually. So the next release for our product for our advisors is going to be what we call kind of context mapping. It's going to be a dashboard where here's all the last communications you've had with your client. Here's the summary of the meeting notes. And the system's going to basically prompt them with here's a summary of the things that you've talked about. Here's some things that might potentially be on their mind or on your mind, or that you should talk to them about. So I think AI is going to be a very powerful tool as we go forward to just help provide summaries like that. So it's at least a helping point to get advisors organized and help them do their job.
Yeah, that'll be great. I'm really excited about the future of work, if you will, because of some of that technology.
Yeah. I mean, everybody's worried about AI taking their job. I'm not worried about that at all. I'm thinking, how can we be on the forefront of using AI to help make our jobs easier and make everybody more efficient? Because I think that's where it's going to provide the most impact in the near term. And then, obviously there's going to be some unexpected things down the road where it's going to, disrupt a little bit more here or there, but I'm excited for it.
Yeah, definitely. Among other trends in the RIA space that maybe I've experienced or heard of or whatever, I wonder what you're seeing in this regard in terms of the transition of wirehouse advisors to more independence. Is that still a thing, or is that kind of stabilized from what you can tell?
I think it's stabilized a bit. I think that trend, I think the people that really wanted to move out of the wirehouses, the big push I think is over. I haven't seen as many moved out of that recently as there has been in the past. So I'd say that's not quite as prevalent as it had been in the past. I mean, and that could just be my perspective, but I haven't seen as much movement from the wirehouse teams. I mean, there's still a few here and there, but it's not quite as frequent. I don't think it's going to be quite as prevalent. I think that's stabilized at least a little bit at this point.
And you guys are picking up advisors that are already independent.
Yes. Most of the advisors that we have are already at an independent in some way, shape, or form.
Got it. Okay. Maybe you could talk a little bit about how you ended up in the industry to begin with. I know you mentioned you started in tax, but even before that, how did you get to that? Because I think part of your background is you grew up on a ranch, right?
Yeah. Yeah. So I grew up on a multi-generation ranch in Montana. So early on, I knew my older brother was probably going to take over the ranch. So as I was looking at what I wanted to do when I went to school, I got a master's in accounting and then went to work for Arthur Andersen. But I didn't realize I got on the Andersen Titanic after it hit the iceberg. So yeah. So after that whole experience, I decided that maybe the CPA life wasn't for me, and then ended up joining a multifamily office where they were kind of looking for an accountant to help them join and kind of grow the back office and supporting of their ultra high net worth clients. And that was how I got into the industry.
No desire to stay out in the field, if you will, out in the ranch?
No. Anytime it's -20, I usually call my brother and say, how's calving going? Yeah, I bet it's cold out there. I'm in my nice warm office, and I have a good laugh about that. But yeah, it's definitely a different lifestyle, and I do miss parts of it. I mean, being outside, being on the land, and having that whole experience, I wouldn't trade it for the world. It was such a good way to grow up. Gives you a lot of good background on work ethic and staying true to your word, and it's a lot of good people out there that I learned more from that, I think, than I as I look back, I learned more from that than I realized.
That's fun. That's great. I tell you, I just recently moved out to the burbs, and now I can actually see the sky again because I used to be in the city. But I just kind of miss the stars at night in Texas and being able to look out and see that and being outside. But
when I grew up, my closest neighbor was about a mile away, so it was dark as dark if you walked outside, and there was really no lights on the ranch. So you could definitely see the stars, the Milky Way. That's something I do miss a little bit, is just being out, working the long nights and the long hours of just being out on the range and seeing the stars and all that kind of fun stuff. So
now let's go back to the RIA business a little bit. And now a question perhaps more selfishly. What do you think some of the best ways product sponsors like myself, VanEck, and others can help RIAs?
I think there's a lot of ways. I mean, as advisors are getting spread thinner and thinner with the different things that they're trying to provide, I think a lot of the fund complexes have done a really good job of helping with kind of practice management things and being a good resource and a good research partner for some of the RIAs. I think that's where they provide the most value. As you're well aware, there's some of the more basic stuff has been commoditized across the industry. So that's kind of, you can get that most places, but it's where can you be a good thought partner? Where can you be a good research partner? And how can you help me be more efficient in my practice? Where I think that's where a lot of the value add can come from.
Yeah, that's great. That continues to be an area of focus for us, and I think the industry as well, is making sure we are good partners to our clients and their clients as well. So yeah, thanks for that. Do you do any investing yourself, kind of just personally? I imagine you do.
Yeah. Well, I mean, it's funny, it's just like anything else. When you spend all day doing it for work, it's hard to do it at night for yourself. So I would say my investment portfolio is not quite as good as I want it to be, because I spend all the time focused on it for the firm and for our clients versus for myself. But yeah, I mean, I dabble in the investing side for sure, and I've spent a lot of my career in kind of the alternative space. So I definitely like to focus on more of the kind of the more off the wall things rather than a lot of the traditional stuff. But yeah, if you looked at my 401k, it's pretty traditional, just like everybody else's. And for some of the other things, it's I obviously still have a little investment in the ranch and some other things like that. So I have my farm ground, alternative asset pretty well filled up. But yeah, so it's things like that.
Yeah, that's kind of where I was going and trying to get to a little bit in terms of, I was going to ask you about thematics, for instance, and I'm not going to ask you for a recommendation, and this is by no means a recommendation to do anything, but just more out of curiosity, what's out there that excites you, like in terms, I don't know if it's a certain theme. You mentioned alternatives. I mean, privates are a pretty big deal these days. I don't know, anything top of mind?
I mean, I'm definitely a long-term investor. I like to look at valuations and long-term economic cycles. So for me, it's really about where can I put assets where I think there's the best long-term return, and that's really where I focus, for myself, and where I focus our research team as well. So it's really looking at long-term valuations. Where are we in the cycles, and where do we think are the best opportunities to put capital to work, for a longer period. I don't want to look quarter to quarter, month to month, day to day. I definitely don't want to be a day trader. That I think I don't have the personality for that. That'd be too high of a stress level for me. But it's really thinking deeply about long-term capital market assumptions. Where are the opportunities in the market? we have the fortune to be working with clients that have the ability to invest for the longer term, and aren't really focused on I need money tomorrow and how can I that's more the Vegas mentality. I don't think that's who we are and what we want to do. It's really building long-term portfolios, really looking at valuations. Where can we find the best opportunities to put our clients' assets to work and put them in the best spot to be successful.
So this next question is somewhat related, but you can take it wherever you want. It could be about what we just talked about in the RIA space, or it could be about something else that really, again, excites you. But what's one long-term trend you see playing out over the next year or several years?
Yeah, I think the trend that I see the most is really on the technology side in the RIA space. And I see that that's becoming more and more of a focus at every conference you go to. It's how do we have better tech? How do we supply better tech or better performance reporting or better integrations? But I haven't seen anybody solve the problem yet. But I know that it's going to be coming out there. And again, what our impetus is, we just want to build it ourselves rather than trying to figure out how we can make everybody else's software play together. But that is a trend that I think is not going away, and I think is going to be significant in the market for a long time. Of how do we do better on an integration perspective to make sure the CRM and the portfolio reporting and all the other different pieces and financial planning are all integrated together and working well, so that you have that integrated solution. And we're not there yet as an industry, but I think that's definitely a trend that's going to continue as you look forward.
Yeah, I'm really excited to see how all that plays out and the advent of AI and everything kind of connecting them. I think it's exciting times. You want to play trend or fad?
Sure.
I'll ask you about 3 or 5 different topics.
Yeah.
There are no wrong answers, and feel free to explain them if you want or not. We can keep going, but let's see. I'll just come out with a few of them here. Private credit, trend or fad?
I would say it was a trend, but I think we're getting to the point where it's almost a fad. I think it's almost been overdone at this point.
Nuclear energy, trend or fad?
Trend. I think with all the AI and the demand for power going forward, I think that's an interesting one.
This one I might have to explain. Early holidays, like for instance, I went to Home Depot. They've already started putting up Christmas ornaments. Is that going to get earlier?
Yeah, I mean, it used to be, it was the day after Thanksgiving, and then it was like guaranteed that that's when the Christmas decorations go up. But yeah, like our Costco had Christmas stuff up before Halloween this time. So yeah, that's, I think that's a trend. I mean, I think we're going to get to the point where it's like Memorial Day and the Christmas stuff comes out. I mean, it's getting earlier and earlier. Yeah. I don't know. Oh, I hope that's a fad. I'd like to push it back a little bit. I mean, I'd like to enjoy the actual holiday that you're in rather than already focusing on the next one. Yeah.
I'm going to come to my next Halloween party as Santa Claus.
There you go. Yeah.
Yeah. This is awesome. Eric, thanks so much for your time and your insights. What's the best way for people to learn more about compound planning, follow you guys, and what's going on?
Yeah, I mean, definitely follow us. We have some social media accounts. You can follow me on social media. You have a lot of ways to do that on LinkedIn. www.compoundplanning.com. We'll get you to the website and take a look, and you can obviously play around with the dashboard and some of our tech there, and see our advisory team and interact with us from there. So yeah, we'd love to continue the conversation and see if we can help or go from there.
Perfect. Great. Well, again, thank you very much. And thank you for tuning in to another episode of Trends with Benefits.